Good day, Regent Fong. Can you hear us okay? We're just doing an audio check.
Hi, yes, I can hear you.
Okay, we will begin shortly.
All right.
Okay. Good afternoon and welcome to the special joint meeting of the University of Guam Board of Regents, Budget, Finance, and Audit Committee, and the Investment Committee. Oops. Okay. My name is Regent Mike Naholowa'a, Chairperson of the Board, and I will be presiding over today's meeting. Today is Wednesday, June 3, 2026. Thank you for all being here. It's exactly at 2:01. The meeting is being held in accordance with the Guam's open government law, with notices published in the Pacific Daily News e-edition and posted in the Government of Guam public notice portal. Today's meeting is open to the public and is also being live streamed on the University of Guam YouTube channel at www.youtube.com/UOG Tritons. Please note that this meeting is being recorded. By attending, you are consenting to being recorded, including any remarks you may make during the meeting. Number one, call to order. At this time, officially call a special joint meeting of the Budget, Finance, and Audit Committee and the Investment Committee to order at 2:02 p.m. New business. Budget, Finance, and Audit Committee. The first item on the agenda is item 2.1-1, approval of the release of the annual external audit report. Okay, I'd like to ask for the approval of the release of the annual external audit report. Can I have a motion, please? Okay, I'm sorry. Okay, I see. Okay, before we get there, I will now invite the appropriate university representatives or external auditors to present this item. Please.
Thank you, Mr. Chair, and good afternoon to yourself, Regent Chris Duenas and Regent Marcus Fong online. Thanks for this opportunity to be able to discuss and hope for your favorable approval of releasing the University of Guam's fiscal year 2025 audited financial statements. This is for the period October 1, 2024 to September 30, 2025. We do have in the room our auditors from Ernst & Young, partner RG Tagliayan, as well as Ann Roderos, the position is manager, our audit manager, main point of contact for our folks. As in my experience at the airport and we just want to first off thank not only our auditors, but the entire business office and UOG team that has led the audit. These are, of course, annual, but they are pretty large endeavors, especially given the university's vast amounts of federal grant funding, of which this year $66.5 million in federal expenditures over dozens of grants. I just wanted to highlight before I pass it over to EY's partner, RG, to go over their presentation, just that we appreciate the partnership we have, respecting, of course, the independence, which they'll discuss. But is a highlight, of course, we're looking at an unqualified, clean opinion for this fiscal year for both the financial statements and the compliance audit. In addition to that, we'll discuss a little bit more about EY's presentation afterward.
Okay.
So I want to thank, of course, the team here in attendance from the business office side. We have our comptroller, Abby Martin, and then associate comptroller, Elsa Flores, as well, and then their entire team maybe tuning in. I'm not sure. Maybe it's not as interesting to listen to. But with that, I'll turn it over to RG. He has a presentation for the board, and then we'll go ahead and discuss after that.
Great, please do. Thank you.
Thank you, Ricky, and good afternoon, everybody, Chairman,
Yes.
and Regents.
We do have a short presentation with you today to present you the results of the audit of fiscal year ended September 30, 2025 audit of the University of Guam. We'll go ahead and move on to the following slide. We do have just a few agenda points that we'll cover. First, we'll go over some of the financial statement numbers as presented in the basic financial statements of the university, which includes the statement of net position as well as the statement of revenues and expenses and changes in that position. If you have any questions related to those matters, of course, we'll have the business of Abby or Ricky to explain some of those fluctuations. But if there's any high level items we'd like to point out, we might point it out as well.
Of course, thank you.
We'll move on to the next slide, which is just our short agenda item that we're talking about. But let's jump straight into slide 4, which is going to be related to the statement of net position. So as you can see, the amounts here relatively flat from previous year with a significant change in increase in cash and cash equivalents, with a decrease in the amounts receivable from the endowment fund. So it's almost correlated to each other. The other thing of note here is just related to the decrease in short-term investments. A lot of that is just movement of where your cash is at. Moving on to the next slide. As it pertains to the non-current position of your assets, I think just of note, right, a slight increase in your overall total non-current assets. But overall, your depreciable capital assets decreased primarily due to depreciation. Your increase in non-depreciable capital assets primarily due to ongoing constructions related to the Wary and to the nursing building. Okay. Moving on to the liabilities, a lot of these are just timing related matters as it pertains to when liabilities are recorded and paid by the university. Moving on to the next slide. No, again, feel free to just ask.
Is this the same format as what I'm seeing here, or is it?
So the format on the
Let's
draft
do the
financial
foundation.
statements,
Yeah.
that you have, this one just focuses on the university's
okay.
operations. The presentation that you have in the draft financial statements, by requirement of GASB, requires that the reporting entity, university, present side by side its component unit for presentation to the users of the financial statements. We understand it hadn't been what was there before, but in the effort to improve or to be more in compliance with the GASB requirements, now it's being what's presented on the draft.
Okay.
What you will see on the final draft, though, is will be a 4-column analysis instead of a 2-column right
Okay.
now. Only because you do have comparative set of financial statements, our recommendation is to be able to see the numbers from last year to this year
Okay.
to be on one page, because it's a little bit harder to examine when it's on 2 different pages.
Okay.
Yeah.
Yeah, I was just trying to focus on this because I can barely.
Yeah.
Okay.
Yeah. So here we are in non-current liabilities with a significant decrease primarily related to the decrease in the share of collective total OPEB liability from last year. Those numbers you guys don't really have that much of an impact control over. And,
Yeah.
Right. That's really dependent on how the OPEB plan is managed or administered in the
Right.
overall. But what I could say is that the OPEB liability had a significant decrease primarily because the expected healthcare costs has gone down
Right.
compared to previous years, partly due to the self-insurance plan that was implemented by the government of Guam, primarily significantly effective in 2025.
So does that inflow come from the retirement fund or?
No, it comes from DOA.
Do
DOA does OPEB. Retirement
Okay.
fund does pension liability.
Okay.
Sorry, it's even smaller, but this is going to be your statement of net position. Just basically the difference between your assets and your liabilities is going to be your statement of net position. A lot of it's relatively the same, with a significant impact being a decrease in your unrestricted deficit, essentially. Of note, I think it's just worth noting that a lot of that deficit actually comes from the OPEB and pension portion. Having that reverse, you would be on a positive net position.
What year did that take effect?
back in 2014.
2014,
Yeah.
15, we implemented in 15, I think.
That's
15,
something.
Yes, 60,
68 and
68,
71.
yeah.
Wow.
So it's kind of weird, but again, what the intention of the GASB is to make sure that, hey, your future liability,
Yeah.
right, is presented on your current set of financial statements.
Yeah.
Although I think granted for the OPEB, VAs don't pay for it, but there is no agreement that DOA will forever pay for the OPEB of your retirees or your current employees.
Okay.
Any other post-employment benefits are COLA, health insurance, those things. So it's pretty significant.
So similar to what they did with the leases, right? Where they just threw it on the balance sheet a few years ago. Similar concept, I think.
That's a similar concept, although when it comes to the leases, at least you have an asset offsetting with your liability, so
Yeah.
that's have significant impact in
Yeah,
that
okay.
position.
Yeah.
Here, it's just it's
The
the liability.
That's all I do.
Yeah. So, it's still pretty, it's still, again, it's just what's there now in your
Yeah.
financial statements.
Okay.
Moving on your statement of revenues, expenses, and changes in that position, you do see a overall operating revenues decrease from 62 mil to 58 mil. A lot of it is coming from the increase in the allowances that were provided for during the year, increasing from about 8 million to about 12 million this year. The allowances of FY, for your information, allowances is primarily related to both when you have long outstanding receivables from students that are not paying, as well as whenever you have a Pell Grant being a Pell student
Yeah.
will go out as part of that line item.
Okay.
as well.
What's the number? I can't read.
For
The allowance increase.
Oh, sorry.
Scholarship and discount.
Yeah, scholarship.
Uh-huh.
If you go back one more slide,
It's 12 million,
yeah,
8
from
million.
8.2 to 12.6 million, so about a 4 million
Wow.
increase.
Okay.
Overall, there's a decrease in the amount of operating expenses, 134 to 125 million. With various reasons in there. Moving on to the non-operating side of the financial statements, which I guess bears mentioning now that this presentation will change next year and after the implementation of GASB 103. But what's included in here is primarily going to be, it's titled the loss and disposal of assets, but this is really the transfer of the GCR from the university to the Department of Chamorro Affairs.
Oh,
So
okay.
the value of that building basically got written off of your books and transferred over to another government entity. The
Okay.
value was 10 million as of this year.
So it had no book value.
It's
Or-
10 million.
10 million.
Oh.
Yeah.
Oh, okay.
It's a relatively new building too.
Mhm.
And those are primarily the impact. Oh, sorry, if you can go back one slide. Sorry. Yeah, so overall, your change in that position went from a decrease of 13 million last year to a decrease of 2 million this year. So it is an improvement overall in terms of the change in that position. A lot of that, you can see that the increase in capital grants, that's those federal capital grants actually help fund the building noted in the increasing capital asset.
Yeah.
If nothing else, we can move on. As mentioned by Ricky earlier, this is just your summary of your schedule of expenditure of federal awards totaling about 66 million expended during the fiscal year. Okay. Moving on to the auditor's report. And again, as mentioned by Ricky, at the conclusion of our audit, we're expecting to issue unqualified or clean opinions as it
Good.
pertains to the financial statements of the University of Guam, its component unit, as well as our opinion on the examination of major programs of the university during fiscal year 2025.
Good.
With the way that we present auditors, right? The clean opinion is basically the thing that is
that we highlight, although as part of our reporting requirements, we do have findings, and that's the thing that we'll be discussing next. We'll go on to the next slide. So as part of the financial statements this year, two things impacted your statement of net position, restatements of prior year financial statements. This includes the adoption of GASB 101, the compensated absences, and we'll talk about that on the following slide. And the other is a correction of an error pertaining to the arrangement between the foundation and the university related to the construction of the School of Engineering as well as the Student Success Center. Okay. We'll move on then to the next slide, which is highlighting the impact of GASB Statement 101 compensated absences. So this is one of those statements again that has just an impact on your liability without a corresponding asset. So
Asset,
yeah, it does increase your deficit essentially. What it is that GASB said that all types of leave that accumulate, as long as it has a chance of being paid out in cash or being converted to something else that would be paid out, right? Or be used as leave, should be recorded as a liability in your books. And historically, sick leave wasn't part of that, but now sick leave is considered. The university has performed their study, and based on the more likely not to be used, based on the last in, first out method, the university recorded an additional $4 million in compensated absences liability.
So that jumped on the P&L.
So the way that restatements work, when you adopt a new accounting principle, it actually hits your beginning net position
Okay.
for the earliest period presented.
Okay.
So it just hit your net position. On the P&L, the only impact would be the movement essentially of that liability from year to year.
Okay.
Prospectively, as long as there's no significant change in the university's operations, meaning you don't hire more people, the type of leave that you offer doesn't significantly change, and the leave benefits doesn't change, right? That number should stay relatively the same from period to period.
So last year was the adoption year?
This year was the adoption,
This year, this year.
2025.
2020, this year as in this audit?
Yeah,
Yeah,
fiscal year
okay.
25 was
Yeah,
the year of
okay.
adoption.
Okay.
But whenever you do adopt a new accounting standard, you have to present it to the earliest year presented, which is fiscal year 24.
Okay.
Thank you. Okay. For that overall impact, you could see the overall impact's about 4 million, with the net difference change is only about 65,000. So again, we're not expecting significant changes.
Okay.
Good.
Okay, moving on to the next slide as it pertains to, I think what the matter pertaining to the material weakness identified in the financial reporting, and this pertains to the arrangement between the foundation for the construction of the School of Engineering and the Student Success Center. So in this scenario, there was a lease, right? University leased the land to the foundation. Foundation got a loan from the USDA. They used that loan money to construct a building, which is going to be then leased back to the university. That wasn't presented in previous fiscal year as that type of transaction on the university side. So that's what's causing the correction of an error noted here. So if we could move on to the next slide. What it is that the university recorded about 7.5 million of construction on that building as CIP rather than really seeing that as the construction of the foundation. And hence, that's why the correction of error was necessary.
Maybe just talk about the future effect,
Yeah.
because in next fiscal year,
It becomes
that reverse.
our building.
Yeah. Yeah,
It's
so
the timing of that.
it is the timing effect. So to Ricky's point, so what it is that you've entered into a finance purchase agreement essentially for this building, right? Because at the end of the lease with the foundation, the title of the building now reverts back to the university. So under the relevant GASB codification L20, basically you record that asset at the time that you commence the lease, which is this year,
FY 26.
26. Yeah. Okay.
So next year you'll see
You'll see
a
it.
large asset.
Yeah.
Yeah, that can put on the balance sheet.
Yeah. And that might not have an impact immediately on your on your statement of revenues, because what it is, it's gonna be both asset plus a liability, because now you're on the hook now to pay for the lease.
So that'll be the due to the foundation? Okay.
Okay. So our recommendation here, because this is a very unique type of transaction, right? Our recommendation is always whenever the university enters into these type of transactions, that a formal memorandum of analysis on how the transaction should be accounted for would be put on file, just to help with recollecting what the appropriate way to record on the books. So,
Was it immaterial in previous years that we didn't make it go on?
So
previous-
no, what it is, it was a misinterpretation in previous years. And based on that, it was presented like it was a loan of the university, and that's why it's being reported. But really, if you look at the substance of the agreements, right, both the form and the substance of the agreement, there is a lease out and lease back.
Yeah.
And that should have been how it's been reported. So it was restated in previous years because yes, it was material and it should have been caught in previous years.
Okay.
Okay, and this is basically the views of responsible official as it pertains to this correction of an error. Okay. Moving on to the next slide. This is pertaining to on our compliance audit. We do perform procedures related to applicable compliance requirements as stipulated in the compliance supplement related to use of federal grants, right? One of that is going to be reporting. And reporting has very specific requirements as to what to be reported to the grantor agency. In this case, this is the EDA, or Economic Development Administration. So what we identified is certain instances where the amounts being reported really was not the correct amounts that was based on the financial statements of financial records of the university. It's significant enough that we had to identify it as a material weakness on our report. But hopefully, again, I think there's been a lot of discussion with the grantor agency. There's no need to correct the amounts, but it's always recommended that those records align closely to what is in the report. Also, just to make sure that the right method is being checked as you prepare those reports, because it could be cash or accrual, and that can make a significant difference.
Yeah, we'll note that no question costs as it relates to this. And I know that with regards to the check box, I think the annual filing was correct. And then also in communication with our federal grantor, no compliance issue on their side.
So moving on to the next slide, basically, again, just it's just the wording on the report that you've had in person. Okay, moving on to the next slide. Yeah, and this mentions what Ricky just mentioned, that you get our in consultation with EDA in regards to the filing of it. And the university will have its review procedures over the SFR 25 forms. Moving on to the next slide, the other finding that we are reporting on is related to the wage rate, the Davis-Bacon Act. So for a major program, so whenever the university is involved in a construction project, there's a requirement that the university is in receipt of wage rate for both its contractors and any subcontractors of its prime contractors, right? Just basically to ensure that federal monies are being used appropriately throughout the chain of use during a construction project. So there is no identified question cost here, because based on our testing, you significantly have all of the compliance, all of the wage certified payrolls. However, for 3 out of the 8 instances, we didn't identify internal controls to verify that it's complete, right? One of the requirements for compliance is that one of the federal grant requirements is that you establish internal controls during the use of the funds and to maintain compliance with the requirements. So for 3, we just didn't see them come in and being checked for completeness. So I think that's something that the university is working on to ensure that those controls, they have implemented the new controls to track completeness now of certified payroll.
Yeah.
So that's something that we've considered in assessing the level of
Okay.
the complete.
And RG, for those 3 months, those are for the months prior to the last audit coming out, right? Before it was actually corrected.
That's right. Yeah. And then it's always a recommendation because sometimes audits don't come up right away, right? That if there is a finding pertaining to something that's still ongoing, that the university takes steps to, the auditee takes steps to correct whatever's still in the audit period prior to the next audit, so that the findings don't repeat. That's our usual recommendation.
Okay.
Okay. Yeah, so that's what Ricky was mentioning related to that. That's prior to transactions prior to the conclusion of the fiscal year 24 audit.
Okay.
Any questions on the findings before we move on to new accounting?
No. Let's go into the exciting stuff.
So for the new accounting pronouncements, this is the thing that the university will be paying attention to for fiscal year 26. And the biggest one is going to be GASB 103. It's going to be a bit of an undertaking. The MD&A, the management discussion analysis, will be revamped and will be a bit more focused when it relates to analyzing the reasons for fluctuations on numbers from last year to the current year, right? Again, a reminder that if you have 3 years, that you're supposed to put the analysis for the 2 years, both from the year 1 to year 2 and year 2 to year 3. With regards to that, the other significant change is going to be the presentation of proprietary funds, which University of Guam is. There is going to be a change for non-operating revenues. There's a clarification where now a bunch of the numbers will show up now as subsidies underneath operating revenues. It might have an impact on the way that you guys report to WASP, right? And might impact might impact the way you discuss those matters with the Western Association of Schools and Colleges. The other matter that for the new pronouncement is going to be, sorry, go back one second. It's related to, that's the one that has the most significant impact for the university to pay attention to next slide. If we can go back now, we can go to the next slide for section 9. So this is just again a reconfirmation of our independence that we are as EY are unaware of any matters that impairs our independence or able to conclude our audit on the financial statements as independent auditors. So again, just wanted to confirm if anybody within university is aware of any matters. If none, then we should be okay to conclude. Okay, and lastly, it's going to be on we just wanted to end the meeting with a warm thanks again. We do appreciate Abby and her team, the business office, and also as well in assisting us in the completion of this audit, both on the financial statement and uniform grant side. Again, without them, we weren't able to complete this audit in a timely manner, timely fashion. So again, we extend our thanks to the team at UOG for the cooperation and the coordination to complete this.
Good.
Thank you.
Good job, guys.
Thank you. And I don't want to be remiss and not thank also the Office of Public Accountability. I know the public auditor is online as well as his auditor Fred Jones. So I just wanted to thank them for the coordination. I know that the plan after this is the official release. So after this, we'll be working with not only our auditors, but the Office of Public Accountability to officially have this release. The action for the board at the moment is for the approval of the release of the annual internal audit report. And after that, if we get the favorable action on that, then we'll be working to get this officially released.
Okay, yeah. Okay, good. Any other questions? Marcus, any questions?
Yeah, just a quick one. This is my first
Oh.
one to look through. I wanted to ask if any of the findings or deficiencies from the prior audit were they all corrected, or were there any carryovers?
Yes, yeah, great question, Regent Huang. I believe there were 6 identified findings, 5 of which have been implemented via our corrective action plan. One of the 3 findings that Ernst & Young had mentioned and is in the report is a repeat. That's related to the certified payrolls.
But that has since been corrected, or there is an action?
Yes, that's correct. For fiscal year 26, we don't expect that to, although we can't tell, but we don't expect that to be an issue.
Okay.
Okay, that was it. Thank you.
Thank you.
Okay, thank you for the presentation. Okay, and sorry, it's my first chance at this one, so. Okay. If there are no further questions, the chair will entertain a motion to approve the release of the annual external audit report.
So move, Mr. Chair.
Okay, can I have a second?
Second.
Thank you. Okay, it's been moved as second. All those in favor, please say aye.
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 All those opposed say nay. Any abstentions? None follows, motion carries. Thank you. We'll now move to agenda item 2.1.2, approval of the internal audit plan for fiscal year 2026 to 2028.
Okay, Mr. Chair?
Yes.
I'll go ahead and start, and of course, I have Renee, our risk officer here, who does lead our internal audit function. You can step over. We
Thanks a lot,
expect it
sir.
to be thank you so much.
Thank you very much for coming. Okay,
Yeah, so if we could just get the presentation up, this should be a rather quick one, Mr. Chair.
okay,
I'll just give the background and then I'll turn it over to our risk officer, Renee,
Okay.
to kind of explain just the quick process of how we determine what our audit plan is going to be.
okay.
But just a really quick background. If you go to the next slide. Yeah, so this one here. Yeah, if you go to the background slide. So just a quick background because we have not done this in prior years.
Hmm,
The board created the risk officer or internal audit function back in 2016. It was an internal auditor position, and now we had changed it to a risk officer position. The board in 2020 adopted its audit charter. In that audit charter, it governs the activities of the risk officer, but in that audit charter delegated the authority to approve the audit annual work plan
Okay.
to the audit committee, which is the BFA committee.
yeah,
And so with that, we did have a memo to the chair yourself,
Yeah.
which per the charter requires my signature and the president's signature, the acting president's signature,
that's fine.
and then approval by the committee. And so the risk officer, of course, reports functionally to the board, but then reports administratively to my
Of
office.
course,
And if you go to the next slide, just real quickly, the purpose and mission, of course, of the internal audit function is to provide independent objective assurance and consulting services designed to add value and improve the operations of the university. Also to enhance and protect organizational value by providing risk-based and objective assurance, advice, and insight. So just wanted to give that really quick background of what we're doing here. And then I'll go ahead and just turn it over to Renee. She just walked through how we went from here's the audit universe all the way down to
what it is now.
what we're actually going to be going over.
Okay, awesome.
Dr. Vicky, can we please move to the next slide? Okay, so this slide sets out the purpose and approach we did for the development of the internal audit plan. So one of the responsibilities of the internal auditor or the risk officer, as outlined in the audit charter, is to submit a flexible annual work plan or internal audit plan to the BPAF, the president, and the audit committee. Our approach, we adopted a risk-based approach where we identify key processes and units within the university, and then we assess the level of those units that we've identified. And so we incorporate also input from leadership and prior audits. So prior audit findings, current audit findings, those were considered in the development of the audit plan, internal audit plan. And also, one of the factors is the compliance requirements and the emerging risks we've considered that are relevant to the university.
Okay.
So after we considered all those three, we assign a risk score of high, medium, low, depending on the likelihood and the magnitude of the risk we've identified. Next slide, please. So next, this slide is a graphical representation of the process. So we start with the development of what we call the audit universe. So this is basically a comprehensive list of auditable units, which may include, which includes the core functions such as finance, procurement, IT, facilities, and so on. And from the audit universe, we as I mentioned before, we did the risk assessment, and the audit universe and the risk assessment is the foundation of the internal audit plan.
Okay.
And after we've considered, all risk factors, we come up with the risk scores, and then we have the end product of this process is the focus areas. So
Okay.
the focus areas are considered high risk areas, and this will be the focus of the internal audit activities for the next 3 years.
Yeah, I'll just add to the audit. So, I mean, it's a pretty comprehensive process that Renee has come up with. Obviously, the audit universe, includes, like she mentioned, other things that she didn't mention: auxiliary, HR, institutional support, IT, purchasing, research and sponsor throw grants, and so forth. And these risk assessment criteria she's looking at that scored these areas. Financial impact, that you see financial impact of these audit universe items, regulatory exposure, operational complexity, such as some of our auxiliary units, prior audit findings, and then likelihood of any errors.
Is there a coordination with OPA, like for possible overlap or synchronization?
Well, every time I think of audit or an internal audit function, it's also for efficiency's sake, right, to improve on. But I think as we kind of formalize a lot of this, it may help to inform some things that we might need an external auditor to take a look at. But these are obviously internal to ensure that we are, not only complying with, the rules and regs that we have or any laws, but it's also just to increase and improve efficiencies where necessary. So.
Okay.
Yeah. Okay. Yeah.
So next slide, please. So as a result of the risk assessment process that we came up with about 6 focus areas, and also considering the emerging risks that may or may not affect the university in the following years. So this focus areas, we will develop internal audit plans, perform our audits, and then report the results of the audit to the committee. But also note that these areas may change. This is subject to change depending on any significant changes in regulatory requirements, the financial status, yes, and
yeah, what we kind of wanted to do, and we knew it was supposed to be an annual audit, but we wanted to kind of forecast 3 years ahead, and then so next year we'll probably look back at the results of fiscal 26. But you'll note that financial management and purchasing, based on the risk assessment criteria, we're looking at those focus areas each fiscal year.
Yeah.
So those include, some engagements include like federal grant, time and effort, grants accounting, and some other types of purchases, construction cost audit, and so forth. So, but when you get into kind of fiscal year 27, you'll notice there's an IT component there. So we're going to be looking at IT security and cyber resilience, and then kind of toward fiscal 28, we get into financial management, health, safety, and HR, those could include things like recruitment and hiring, maybe maintenance as we are improving some of the capabilities of our FMS, emergency preparedness.
So fiscal year 26 and 27, these items not really noted, and you're waiting until the 28th, am I correct?
No, so we're gonna, yeah, so these focus areas are what we're gonna be doing this fiscal year. Of course, we're kind of midway through.
Right,
So we're gonna continue those efforts into fiscal 27, but in fiscal 27, we're going to be looking at some focus areas related to IT and security.
okay,
And the next, the following fiscal year is, continuing financial management and purchasing, but also looking into facilities, health and safety, and then some HR related processes.
Employee relations,
yeah.
employee retention.
yeah, okay.
Yeah.
And
So
then-
we're just forecasting out for the
They'll
committee.
include all new buildings and everything, I would imagine, so.
Yeah.
Yeah, okay.
And of course, subject to change as new information based on the risk assessment criteria may come.
Risk assessment is done every year. So although we have the risk register at the beginning of FY 2026, we revisit every year if it's still relevant to the university.
Okay.
Okay,
Any questions? I think this is the end of the
Yeah,
presentation.
in your packet is the written version of this with all the details.
yeah.
So we provided that in the packet previously, but for subject to any questions that you might have.
Yeah.
Thanks, Renee.
Thank you.
Okay, thank you for the presentation. Are there any other comments? Okay. If there are no questions, I'd like to entertain a motion to approve the internal audit plan for fiscal year 2026 to 2028. Motion, please.
So move, Mr. Chair.
Can I have a second?
A second.
Thank you very much. Okay, it has moved and second. All those in favor, please say aye.
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 Okay, all those opposed say nay. Any abstentions? None have it. Motion carries. We'll now proceed to the investment committee portion of the agenda.
Yeah, thanks. Thanks, Mr. Chair. I just wanted to open and welcome Raymond James to the meeting. We have Jason Miyashita here,
Yes.
as well as Amanda Giba.
Yes.
They'll be going over the investment committee item, which is to approve changes to selected equity managers and then to discuss the investment portfolio.
Okay, awesome.
Thank you, Chair, Regents, Management, good to see everyone again in person on the line. So as Dr. Buki had mentioned, we'll go over briefly the capital markets, go over the updates as of today. We have a recommendation on the table for the committee to review and hopefully approve. And then answer any questions we need to ask. So in your folder and also online, just real briefly, markets are hitting really nice highs right now as of today. Markets continue to hit higher highs, which is quite phenomenal, given that we're in multiple conflicts still. War in Iran, the Russia-Ukraine war, the China-Taiwan tensions, and oil just keeps moving up and down by $10 any given day.
Yeah.
So a lot of volatility in the markets, but we are cautiously optimistic that we actually adjusted our S&P expectations from 7250 to 7650. So essentially from start of the year to end of the year, that's about a 10% return for this year. So the expectations are that we are going to generate a positive return for this year in the equity markets. So interest rates also we're watching that as well too. We have a new Fed chair and Kevin Warsh. And now the talk is potential interest rate increases starting in the next year rather than cuts. And so that's very interesting rhetoric that we're looking at in monitoring given the inflationary pressures as a result of the oil crisis and the war that we're still going through. So with that expected volatility throughout this summer, we're hoping for a peace treaty with the war in Iran. And it could drag on into the quarter of this year. So we're seeing a lot of efforts both Guam and with that, we turn over to Amanda and we can go over the update, which is that one figure that we go over in reference time.
Open your folders, it's gonna be on the left-hand side.
Gonna look like a one-page update that you're all used to.
Hey, Amanda, I don't know if we have this online for, Regent Kwong, this version of it.
Hopefully, so
Yeah,
you want me to go through it, or would you
Yeah.
prefer that we not?
yeah. No, we can go. Give it a thought.
Yes, I think I put the copy and then pull it up. I can forward it to you, okay, hold it down, help, yeah, and then the cards, okay, but I can forward it very easy. I apologize. I could you looking forward and everything.
While we're doing that, is it okay we proceed?
Yes,
While we can
Yeah, go ahead.
the update to Region Fong online. So as you can see, this is actually as of the end of May, which we just finished last week.
Yeah,
And overall, you can see the University Investment Fund fiscal quarter eight, we're tracking at 31.914 million as of the end of May. So that basically is a increase of 2.14 million since the end of March. That equates to about a 7.19% return.
yeah.
Overall, the overall portfolio versus the benchmark of 8.4. So we're really trailing the benchmark fiscal year to date because of a number of managers that we also have recommendations to replace after we go over the update. So the Aristotle Capital Value Manager currently on watch, they're up 3.6, but as you can see, they're trailing since throughout the last 2 months, 11.34. They're about 10% of the portfolio. So that's dragging down a good amount of percentage of the return of the portfolio.
Yeah.
Winslow is the growth, large cap growth component, that's the other 10%. They're up 20%, 20.5 versus 19. As a result, as we come off first quarter earnings, what's happening, or what happened basically, was a lot of these companies, especially the technology companies, have reported positive and beat expectations. And so that's why the markets kept going up as earnings announcements were coming through with all these tech firms, technology companies, sector, as well as financials and things. So as you can see, the majority of the portfolio, at least 20% is in large cap. We have Aristotle that's underperforming. Winslow also has been trailing. It's just now they're actually showing a little bit of a positive just in the last 2 months. We do have a recommendation on the table for them, even though they're outperforming by just a little bit. It's basically 0.5, 0.6% outperforming, but they've actually been underperforming. So these two active managers have been underperforming for a while now, and we want to make some recommendations to change that. So I'll turn over to Amanda. We can go through the rest.
We have Vanguard mid-cap value, which is at 857. You'll notice that it's up 5 versus a benchmark at 10. There's not any real issue here. The biggest reason why is Vanguard, if you look online at a ticker, it follows the CRISPR or CRSP mid-cap growth versus the Russell mid-cap value. They're similar enough, except when you hit times like this where you're seeing a little bit more of a divergence in how mid-cap value is performing. Overall, no real problems. It is following its benchmark. It's just not at this point on the right one. Vanguard Group mid-cap growth is 804,000. You'll see there's also a discrepancy on the flip side, 16 versus 11 for mid growth. This ETF also follows CRSP. Vanguard Group small values, 904, that's 12.62, right there with the benchmark is 12.72. And Vanguard Group small growth is 21.37 versus 21.39. We're finally starting to see small growth and even small value, the small cap space really start to perform in 2026. WCM Capital Management is your large value. They're at 4.1. They're doing really well, 15.21 versus 15.17. And really, just to give you an idea, these numbers are not year to date. They're what's happened in the past 2 months, which is
$1 million in 2 months.
you know, if you look at them, you just want to hold your breath and like you like them, you like seeing them. But sustainable, probably not. But still, I mean, I like reporting these numbers. Playrich Investments, which is your last equity manager that is on recommendations on the table for recommendation, is at 3.2 million. Again, this one is at 10.25 versus 10.75. And yes, these managers go in and out of performance, but longer term growth and especially the weakness in the past year really is what's prompting this recommendation to change it to Capital Group. Moving into fixed income, you have Garcia Hamilton and Associates, which is your US core. It's at 5.4 million. It's down about 21 basis points versus 42. Garcia Hamilton, and I believe still is the case. They might be switching up their thesis, especially what's been happening in this past quarter with the Iran and inflation and Kevin Warsh coming on and all this stuff. They really truly did believe that they were going to get a lot more interest rate cuts. So when you're starting to see, like Jason mentioned, that there's actually talk about increasing interest rates, you're seeing a little bit of a divergence in those portfolios. Not too much, it's down 21 versus up 42. Specific income, on the other hand, is at 1.4. They're up 2.77 versus 2.19. So you're seeing that the lower quality bonds are performing better. Just a reminder, Garcia Hamilton is higher quality. But then you have your BlackRock iShares, which is your non-US aggregate ETF. It's at 1.3. It's up 78 versus 1.16. Moving into your alternatives, we have Adelante Capital Management, which is your US Real Estate Investment Trust. It's at 1.5. It's up 7.95 versus 8.53. It was the last time I reported it was outperforming. So it goes in and out, but still a really nice overall absolute number on the return. Lazard Asset Management is your one mutual fund. This is your global listed infrastructure. It's at 1.8 million. It's up 2% versus the benchmark, which was spot. Blackstone Group is BTAS 6. This is a traditional drawdown fund, which means that we've contributed money since we started in 2020. Now, 6 years later, you're starting to see the capital being returned.
Okay.
So it is winding down, and it will continue to wind down over the next 3 to 4 years. Right now, just for the quarter, is up 2 versus 4.4. KKR, if you're private markets with a different company, they're at 958,000. They're at 1.28 versus 4.4. Just a reminder, KKR, we started about 2 years later. So it's now in that little bit of a flip stage where they no longer are calling as much capital and are about to flip over to distributions. And then finally, we have Blackstone Group BCRED, which is at 1.5 million. There's a little slight market fluctuation, it's down about 50 basis points, but overall it is still doing what we wanted it to do, which is to provide income around 9% expected this year to the portfolio. All gets reinvested. Fiscal quarter to date, the portfolio is at 31,914,803. It's made just in these past 2 months, $2,140,000. And it's up 7.19% versus 8.4%, with a lot of that underperformance coming from the managers that we want to talk about today, especially Aristotle. So I will, do you want me to move right into the recommendations?
Yes.
And talk about the conservative side afterwards?
Can I just add, just for context on these funds, 90% of these funds are restricted, related to things like the land grant. So I just wanted to note that as well. So that's all I wanted to add.
Do you want me to go over the performance of the conservative fund, or just go right into the recommendations on the endowment fund, the land grant fund, this fund, just as the next time?
The recommendations were good.
Yeah, recommendation good. Yeah, I want to go ahead.
You all have a letter here. It's in your folder. It's also in the board book. Whichever one you want to take a look at. At the top part, this gives a brief overview of what we're trying to do. And then right where it says below details the recommendations, I'm going to skip through that top part, go straight to Aristotle Capital Management. We have additional analysis to go through, but basically what we are saying is that Aristotle has not been performing for the past 3 years. It's really been a drag on the portfolio. Longer term, the UOG has held it for about 10 years. It's still outperforming its benchmark. It's just recently they have not been, and to an extent that you're seeing 4% versus 11%. We don't like this. It's been ongoing. We put them on watch. It's now time to make a change. The
recommendation on the table is that we change to a Putnam large cap value. You'll have that as the first analysis to review here. And I'm not gonna go through the whole thing, but I will focus on several key areas. Early returns or Aristotle value for the 1 year is 8 versus Vanguard. Russell 1000 value ETF is 15.8 versus Putnam US large cap value is 19.77. And you can see over the 3 years, the 5 years, the 7, and then the 10, that Putnam has outperformed both the market as well as Aristotle.
So just for the record, Regents, this is our search. We went through a search process. And we narrowed down active managers, narrowed down passive proxies as well too. So as Amanda mentioned, Putnam is on there because they rank the best out of our screening of all active managers, similar to Aristotle.
We seem really strong in all the buckets, like the Warren Buffett works there or something.
Can you explain just, which is, I think is really helpful, is the up capture and the down capture, which I think is what was strong, right? What you saw those.
So you're referring to the last page. Okay. Up capture ratio and the down capture ratio, so there's these columns, the first column and then the third column. And what the up capture ratio shows is how much the fund is able to capture over and above or under, depending the benchmark or the market that is following. You want the up capture ratio ideally to be over 100. That means they're capturing all of the returns of the benchmark plus some. On the flip side, the down capture ratio is what it's capturing on the downside. You ideally want the down capture ratio to be less than 100. You don't want them to capture all of it. You want them to capture less of it. And you want it to be under 100. So Aristotle is what it's up capturing all of it, not capturing now it's capturing basically all of the up capture and maybe 20.27 points more. But the down capture ratio is nice as well as 92.54. The ETF is going to be 100-100. It's very much expected that way. The ETF is supposed to follow the benchmark. But Putnam, on the other hand, is capturing all of it plus 3.91. And then, but on the down capture, it's a very nice down capture ratio. It's at 85.77. So the benchmark goes down 100. Putnam saves you on that downside is only going 85.77.
Who's the black? So I see the orange is Aristotle, the blue is Vanguard, the red is Putnam. Then what's the black one?
The black one is the benchmark.
Okay. What's the black?
That
Oh,
black.
the Russell 1000.
The Russell 1000 value. So
Okay.
yeah, Vanguard and the benchmark are very similar in color.
Oh, here it is on the bottom of that. It's like a pentagon or something.
Yeah, it
Okay.
should be a little black
Yeah,
circle,
it should be black. Yeah.
Got it.
Okay.
but yeah, it's a benchmark. Okay, so that's the recommendation for Aristotle. We do believe that large cap value space does lend a little bit more towards active management, to be able to pick and choose the right stocks. And I only preface this by saying this as we move into large cap growth analysis, which we believe to be a little bit more efficient to market. And when we say it's more efficient, it's very, very hard for these active managers to beat the benchmark, to beat the market. They either have to be very, very concentrated in their positions, and as you've heard, that's kind of what's been happening with the benchmarks that beat the growth, because they're cap weighted. And as these companies, especially the AI companies, become valued at larger and larger amounts, it's making it a little bit more difficult for active managers to provide it. If we look at the trailing returns for the large cap growth analysis, you'll notice that Winslow Capital Growth is 11 for the year. And then the Vanguard Russell 1000 growth is 18.74 versus 18.81 for the ETF. And then just going down the line, you can see that at the 3 year, the 5 year, the 7 year, and the 10 year, you're really not getting much. It's not like Winslow is doing a horrible job, right? They are 10 years 16.27 versus 16.83. but they're just not providing as much alpha as we need them. We pay them a fee, so we want them to provide additional above and beyond returns of the market. So they're not gonna be able to do that, then it is a suggestion and recommendation of Raymond James that we go into a low cost alternative and pay 7 basis points versus the 40 you pay to Lisa. It's just highly efficient market right now. Things are moving, highly momentum driven.
Before we go on to the next recommendations, you want to talk about the fee for our sellers?
35 basis points. Oh,
So there's
sorry,
no change in fee.
No.
Because we're on both fees, so we just want to make sure. we're on the right one.
Okay,
at 35 basis points for both.
okay.
And then finally, you have international equity growth analysis. This is ClearBridge. They are doing well this quarter. They're at 10.25, so filling 10.75. And granted, this is as of March 31st. But you can see that they did struggle a little bit in the year. They're up 8.87 versus 19, 8.25 versus 10. And then 9 versus 7.13. Again, this space in the market is vast, right? Because you're talking about everything that's outside of the US. It's a lot of companies to look at to do, very much lends itself to active management. And we do like ClearBridge, but they just, for the past 5 years, have not been performing up to standards. And what I can show you that really did put this into perspective is if you look on this page, which is, I would say, the third page, 1, 2, 3. One way to look at it is not just by looking at the overall returns compared to a benchmark, but looking at it compared to their peers. Right? If we're looking at it and we said all of the international managers haven't been doing well, and they're all really falling below the benchmark, then we would say, oh, okay, you know, maybe it's a market thing, it will correct itself as it comes. But if you look here, you can see that ClearBridge is in the 64th percentile versus Capital Group, which is in the 26th percentile. In the 3 years, it's 60 versus 40, 55 versus 44. You're never gonna find somebody who's going to be in the upper percentile every time, but you wanna be in the top 2 quartiles. So that's what Capital Group does. And has done for the past.
And no change in fee.
Mentioned.
Go ahead.
And no change in fee.
Overall, with these 3 recommendations, you're actually gonna save money by switching off on leasing and passing. Because of the lower fee. And you report that annually, as well to the board of insurance reviews. So we think this is a good recommendation. For you know, research on. There is an additional note there on private equity and Blackstone, but we can address that at the next meeting.
Okay. So overall, saving on the fee, and hopefully improvement in performance.
Net the amount of fees
Yeah,
and improvement.
Still taking that active passive approach in the
Yeah.
overall fund, with a lot of the active going more towards international value, large cap value, fixed income, and private. Any questions? Online and person?
Yeah, just wanted to mention that, as we reviewed this, the team, we concur with the recommendations as well. Just to give you our perspective as well. So we've talked with Raymond James on the recommendations and asked certain questions, but we agree with the recommendations for changes.
Recommendation and the presentation to the committee.
Thank you.
Okay, and then just lastly, we can touch on the conservative PCF. Which is the portfolio review. Just to give you an update. This is as of June 1st. The portfolio is invested conservatively in about 65% fixed income, 30% equities. 24% is in US, so it's a very US based equity position, and 4.87 in non-US. Quarter to date, the portfolio is up 3.59%. Last 3 years, its annualized return of 8.55, and then since inception, its annualized return of 8% year after year. You'll notice some changes, underperformance, I guess, against the custom blended benchmark. Just note this is a fully passive ETF portfolio, low cost. That could be due to some allocation changes, but for the most part, you're in iShares, you're in State Street, you're in Vanguard, all of which follow their market, so no issues there. The ending market value is at $3,648,192. Just for the quarter, June 1st, it's made about $126,360. Since the inception of this fund, the portfolio has had an investment result of $1,117,000. So definitely working for you, but invested conservatively so that you can utilize it. So that's it.
All right.
No.
Any other questions or concerns from the Regents? Manager?
Any questions from Marcus? Any questions?
Not questions on the equity, on the reallocations, but was there a recommendation, or are we approving the private equity recommendation as well on the very bottom of the letter?
We had talked about tabling that to the next meeting,
Okay.
focusing on the first three recommendations. First.
Yeah, we'll carry that one for
It's
this.
the evergreen fund that we're recommending, so we can get in that.
Okay, so today we're going to be talking about the 3 recommendations above, or approving the recommendations above.
That's correct.
Okay, all right, thank you.
Okay. I'd like to call the question then. Thank you very much for your presentation. I think we all have the information that we need. Having said that, if there's no other further questions, the chair will entertain a motion to approve the changes to the selected equity managers and to the investment portfolio. Can I have a motion?
So move, Mr. Chair.
Marcus, second?
Second.
Got it. Thank you. Motion to approve the changes to the selected equity managers and investment portfolio presented. Okay, it has been moved and seconded. Are there any further discussion? None, hearing none. All those in favor, please say aye.
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 All those opposed, say nay. Any abstention? None. The motion carries. Thank you. Anything else, Phil? Okay, that concludes the business of the special joint meeting of the Board of Regents Budget, Finance and Audit Committee and the Investment Committee. I'd like to take a motion to adjournment.
Move to adjourn.
Second,
Second.
say, all those in favor, say aye.
Aye.
Aye. Motion has it, meeting adjourned. Thank you.
Everyone. Have a great time.
Thank you, everyone.
Thank you.